Alimentation stock has drifted lower this year, but of course it's been a reliable growth story for Canadian investors over the years. Let's get more from John Zechner, chairman and founder of Zechner Associates. John, great to see you. Thanks very much for joining us. You're a hold on Alimentation. You're not sold on this story right now.
Yeah, we don't own it right now, Andy. We have in the past, and I'll look at it again. I mean, it was an all right quarter. It was missed on expectations a little bit, and when you look at it, it's very logical. I mean, same-store sales and the estimates missed in the U.S. and they beat in Canada and Europe. Well, it sort of makes sense. We all know that people are traveling less to the U.S. or driving less to the U.S. from Canada, so I'm sure the traffic decreased a little bit going across, and people did more internal travel. So I mean, that was completely logical. I guess, and then on the other side, I guess some of the spending, within the stores slowed down as well. That's more consumer issue. We saw that in a lot of other consumer-related stocks. That's more related to, I think, worries about, tariffs, consumer spending in general, and that was more of the negative impact in the U.S. We're on the sidelines more because of the deal with Seven and I potentially. Like, I mean, this has been a growth by acquisition story for a long, long time, and they should continue to do it. But I mean, the scope size of the deal is so much that I don't know what they're going to pay. I don't know what the valuation is going to be. I don't know how they're going to finance it. While all this is going on, I'd rather sit on the sidelines and, if they actually get something done, we can see what they have to keep, what they can keep, what they have to sell off, what the valuation was, how they're going to finance it, and it would come back to. So that, that's why we're on the sidelines on that name, Andy.
We've got U.S. President Donald Trump. Of course, it's an ongoing cavalcade with him. You never know what way he's going to jump next. But there's speculation out there that he will nominate a replacement for Jay Powell early, although I'm a little unclear. This would be a shadow chairman of the Fed, but the speculation is this would be somebody who's more amenable to cutting interest rates. And apparently that's weighing on the U.S. dollar today.
Yeah, no, that's a real interesting story, Andy, because, Chair Powell was on the Hill for the last 2 days, sort of getting grilled by, the House and then the Senate Finance Committees. And, obviously Trump had put out in advance of that they should give him a really hard time about interest rates. And I mean, Powell is a much better man than me in terms of being able to take sort of the crap to get thrown at him from the president, the personal insults, and he just sort of goes ahead and does his job. But now the bigger question is, will he replace him? What will the markets do, and what's the implication? I mean, there's a few points here that are important. For Trump's basic math is a little bit off. I think in his mind he always wants lower interest rates. Is why? He did that same thing with he did casinos in the 80s and 90s, and then he bankrupted them, and the banks took the hit. You can't do that when you're running the U.S. economy. So he wants lower interest rates to lower the interest payments on the U.S. debt, which is north of $30 trillion. So maybe his quick math, by the sounds of it, hey, if we drop interest rates by 2%, that's $600 billion off the annual interest cost. It doesn't work that way. I mean, the term maturity structure, it's not all coming due at the same time. So, that's a non-entity. All this is going to do, if he puts a new chairman in place early or gets a shadow chairman or anything like that, is going to decrease the confidence in the U.S. dollar by global investors. And you're already seeing a little bit of this. From our point of view, what it does, it probably makes one of our hedges, which is long-term treasuries, a bit more of a risk, because I think if this happens, the yield curve might steepen a little bit more because the U.S. will have to borrow more. You may create more inflation because lower interest rates will stimulate the economy more than they need to, and that's going to be inflationary even if we can knock short rates down. But more importantly, Andy, on top of all of this, I mean, I looked at it again this morning, the way they vote on interest rates, you got 12, Fed members, the governors of various of the other central bank or regional banks, as well as the governors and the chairman. And it's got to be a majority vote to make a change in interest rate. You're only changing one person, maybe an influential person, but you still got to get a majority of votes to get an interest rate change. So you got to change all of them, replace all of them. That's going to completely sort of knock down confidence further in the U.S. dollar and U.S. markets. And I think, so, there's a lot to happen here. You may end up, like the Bank of England, where you see, rate changes after a meeting with the Bank of England, they'll say, 7 voted for, 3 voted for no change, and 2 voted for an increase. You may get more situations like that, but I think that in the end, it's more destabilized in what's going on in the U.S. And this is happening generally. I mean, Trump sort of has his, with a little bit ranty, sort of as his acolytes and all the people who sort of follow and will do his bidding. And you see that in Congress and the House and the Senate and, a lot of the followers and all of that. But sort of the big boys in the playground are starting to push back a little bit. And, why, Andy, have there been, with this July 9th date coming up soon, and, we're not going to have a quiet summer here because this is important. I mean, we haven't seen any big trade deals. I mean, China, Japan, India, the EU, none of them have really come to the table with a trade deal yet. So you're getting pushback from some of the, I call it the bigger kids in the playground. Who are the two biggest kids in the playground? The stock and the bond markets. And I think that's where you'd see the biggest pushback, on this move on the Fed, if he does anything. Just like you saw with Liberation Day on April 2nd, you saw what stock markets did, and the following 7 days, that was the stock market say, no, this is crazy, and then Trump backed off, whatever you want to call it. So anyway, that's my overall picture on what this Fed thing is going to cause issues. But in the end, I don't think it's going to achieve his goal